Hey everybody, Hunter Satterfield here, one of the partners of Kane Waters, as well as the Chief Investment Officer. As always today, I am joined by my fellow partner, Brian Bortz, who heads up our CWA Investment Committee, as we're fresh off our quarterly meeting just a few days ago. And then as well, we've got Brad Sanders, the Managing Director of Tectonic Advisors, to join us as well. This is the August investment update. For the month of August, the S&P 500 was up 2%, with global stocks up 2.7%. So the theme of international outperforming this year has persisted again in the month of August. Domestic bonds up 1.2, global bonds up 1.5. So Brad, as always, would love to come over to you. And on our previous monthly recording, you talked about expected volatility in August, and boy, did we have that. It ended up being a really good month, but it was certainly a choppy one intra-month. So would love to sort of dialogue about that before we go over to Brian on Fed cuts. You want to talk a little bit about what August ended up shaping up like?
Yeah, it started off pretty rough, really bouncy at the beginning of the month. And it was looking like it was going to be your typical August malaise. August and September just always seem to be hard months for the stock market. So we kind of all strapped in for that. And then we had we got a CPI print that was fairly favorable. And then a couple days later was Jackson Hole, where Powell came out and basically it intimated that they're going to start an easing cycle and they're going to cut in September, and the market loved that. And so what we saw the rest of the month was a big spike in, like you just mentioned, all the headline indices, but also more of a broadening of the market. Small caps were up 7% plus in the month of August. And mid caps did really well. Things, prior to that, the past couple of months, it's been all Mag 7 all the time. And that wasn't really the case. And in fact, there's starting to be a little bit of a pushback on the amount of CapEx spend that these companies are spending on AI data centers and training models and things like that. And so you're starting to see the rest of the market wake up like it did post-election and then briefly the beginning of this year, which is really good for our portfolios the way we're positioned. So all in all, an encouraging month. If you're watching it day to day, you probably don't feel like markets were up 2% because it was really rocky. And then, last day of the month, markets down 1%. We start off September a little bouncy too. So I think that's probably going to be what's going to happen for the rest of the year. Is we're just going to have these volatility keep happening, but you're going to grind higher, particularly if the Fed follows through here in a couple weeks. So all in all, an encouraging month. One of the few Augusts in recent memory where I can say it was green, and we are happy about it.
Yeah, it's great. And I think you talked about small caps ripping, which has really been a theme, as we talked about on the most recent podcast that you were on with Judson and I. It's really been a theme here for the last 60 days or so. And I think it's, again, sort of this conceptually, the markets are priming up for what is likely to be some cuts of rates as we head into the fall. And you mentioned already, Brad, a likely 25 basis point cut here in the next few weeks when the Fed meets. Brian, I want to come over to you. So, I mean, I think from our perspective, especially at the IC level, what we spent a lot of time on this week was sort of what do we feel like is coming when we talk to our managers? What are they telling us they think is coming? Having worked with some of the working with some of the best fixed income managers in the country, and sort of just knowing, hey, this is what's coming. So, you want to talk a little bit about what the Fed is dealing with as they anticipate maybe one, maybe two cuts here toward the end of the year?
Yeah, thanks, Hunter. I think that it's as close to a foregone conclusion as it can be that we're probably going to get a quarter point cut this month in September. It's interesting. Brad had mentioned that the month of August was pleasantly green, and he said in our last month's update that really kind of the 2 months that are historically not that great are August and September, and we've seen some volatility here. Some of the economic data that's come out has said that that the unemployment numbers are higher than what they expected to be. That you look at inflation and it's still higher than they want it to be with a 2% target. I think you can argue whether a 2% target is too low or not. But really, when you have a higher level of unemployment, you're worried about a stagnant economy. And when you have a higher level of inflation, you mix those two things together and you get the historical term stagflation. But this is not the same type of stagflation that we saw in the 70s. I still think, as Brad mentioned, that we have a pretty optimistic market. Things are going up. I think we're going to have a softening policy on the Fed going forward into the rest of this year and into the beginning of next year. All those are obviously dependent on inflation staying under control. But as clients, as I'm talking to clients, when you look at your portfolios and you look at your target rate of return to make your financial plan work, I think a lot of our clients, just looking at year to date so far for the first 8 months, you're really close, if you're not already there, to meeting your annual goal for your financial plan to work. So it's been, all in all, it's been a really good year. I think that we should have a pretty strong end to the year. I'm cautiously optimistic. But yeah, I think you're going to get the quarter point cut that we're talking about. So that's what we're telling our clients right now.
Yeah, and that was what we spoke at length about. And thankfully, I think broad diversification, as far as our positioning goes, ought to, as Brad mentioned, do well in that type of cycle, either up or down. Just being very broadly diversified as those rate cuts work their way through the broader economy. So we'll be back in front of you, everybody, at the end of September. We'll, of course, had a decision on a Fed cut or not. So we will talk a little bit about that, especially as we head toward the final quarter of the year. Thank you so much.